All right, what's good, everyone? Welcome in our weekend market update. Today we have two special guests with us, Matt and Cantonese Cat. How are you guys?
Doing great.
I'm freaking out right now. No, not really. How are you doing, Luca? You doing all right?
I'm good. I mean, I've been tracking some really interesting charts here. So I don't know if you guys can see here on the screen,
We
Yeah,
can
but
see
we can
it
see it.
perfectly fine.
yeah,
Yeah,
this
go
is a
for it.
very, very interesting chart I've been tracking here. This is the Velo data I'm tracking pretty much on a daily basis. And it's very interesting. This is the 5 minute time frame. Basically, what we see here is the price going down. So over the last hour, right, since 405, since the last hour, we've had the price going down, the open interest going up, while the funding rates also went down, right? This is quite important. Now, the reason why this is important is because now we are reversing, and in this time, the open interest is going down. So basically, what happened here and what this divergence between the open interest and the price action and the funding rates shows is the price going down while the open interest is going up signals that more perpetual positions are piling in, right? But there's no way through which we can know whether they are long positions or short positions. This is where funding rates come into play. By using funding rates, and because the funding rates were actively going down, it signals that bears are piling in, that late shorts are piling in to this dump. This is pretty much what's currently happening. And you guys can see here the open interest completely dumping right now as the price is going up. So late shorts are getting squeezed. Now, this is pretty important. And I think that these are market makers that are wrecking both sides currently. I don't think this is something that hard to understand. Now, there are a lot of people out there who are completely freaking out right now. I think this is the max fuckery scenario I have been covering in many of my prior updates, where basically both sides get wrecked. There is no surviving this. If you're trying to trade in this range, you're not surviving this. This range is specifically built in such a way to wreck both sides and to flush leverage out of the market before there is any real directional move. And you guys can see here exactly what has been happening. So longs got squeezed, now shorts are getting squeezed. Where are the fundamentals in this move? There are none. These are just market makers who are wrecking both sides in a low liquidity environment following a quadruple witching Friday. So this is the lowest possible liquidity we can currently have in the market, which is why market makers are using this as an opportunity to flush both sides. So for this reason, I think that the best approach moving forward, because I've seen a lot of uncertainties around geopolitical tensions that have been rising over the last couple of days, and this is a topic I would like to hear your guys' thoughts as well. Because I think that the best approach currently is to step back and reflect on the broader market picture, whether something has fundamentally changed to the market or not. And I think the answer to this is no. Nothing has really fundamentally changed from a couple of weeks when we were forming new all-time highs and everyone was excited. Now we've been in this consolidation phase over the last couple of days, basically. And the price hasn't really been doing much, but the sentiment has absolutely shifted from the levels of euphoria and excitement we've seen back in late May to now a sentiment of fear and anxiety and uncertainty. So, what do you guys think on this?
Matt, you want to say something?
Go ahead. I'll let you go first.
Um, yeah, I mean, if you are, I don't know if you want me to like share screen or and whatnot. I think it might be easier if I show what I'm seeing here too.
Yeah, we can
Sounds
pull
good.
that up.
Yeah, let me see. Yeah, I mean, basically, I've been tracking this thing for a very long time. This is the log scale against square, and I really started looking at this really since like late last year, and it's been giving you some pretty decent market symmetry here. a lot of people got extremely euphoric back in December, and then again in January of just a few months ago, whenever price finally hit about six figures, and they think that it's just going to go from here. And I was saying, hey, you know what? It's probably going to be getting stuck here for a while. And everybody was euphoric. If you look at the comments, everybody was like, yeah, higher, 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 right at resistance, right? You're talking about resistance that's been working out very well for the previous run ups over here. And it certainly served as very, very strong resistance here. It came back down, grabbed liquidity down to 70Ks. And then people thought it was going to go a lot lower. And of course, when the sentiment has been reset, they don't tend to do that. Next thing you know, push all the way back up here. Everybody got, like you said, Luca, everybody got euphoric again in May, thinking that we're going to go higher. And then we end up just back testing after we break out through this arc. We end up just back testing this arc over here. The other thing, too, we haven't really had a chance to do until this past week is that we have pushed through this angle, and we really haven't had a back test of this angle until this week, right? And as I was saying, we could potentially get into a scenario where it was going to back test the angle. We might as well touch the arc here again. It looks like it is doing that. It might be getting close to doing that again, although nothing is really a guarantee. I was wondering whether or not there's a possibility for it to even come back lower, but based on the sentiment right now, I don't think so. Based on what I'm seeing right now, I don't think so. The other thing too is if you're also looking at usually the indicators that we generally look at, and I'm going to look at them monthly here because I think that probably gives you a much better idea in terms of what has been happening with the broader market over the years. The market structure hasn't really changed at all. Like, this is nothing like it was back in 2021, because the market structure looks a lot stronger. We're holding the blue line here just fine. We call it the monthly conversion line about the Ichimoku cloud. Here we had the big exhaustive move up here, and it got so tired that we broke down underneath the blue line here multiple times. It just wasn't able to hold it. Here, we're just doing a stepwise approach to ride up, and the blue line up here is riding up as well. A lot of things are telling us that basically there's nothing really broken here on the market structure here at all. And on the weekly as well, it's just been riding up to 50 week moving average, and it's just been continue to bounce off of that. Last time with this big giant exhaustive move, it didn't even really touch it at all, and this is completely unhealthy. And when it touches it, it just got so tired that it broke down underneath it, back tested, and it just ended from there. Right here, currently the market structure is completely different. There's really nothing broken here at all, and I think that this is basically what is needed to get sentiment reset so we can go higher. That's what I think. Matt, want to take it away?
Yeah, I just have one chart I want to show, and that's my total crypto market cap. I've been sharing this on my Telegram and on my X for a little bit, and I think you've been paying attention to it as well, Kat. But
you want to switch it to yours too? Oh,
so
there you
go. It
nice.
Finally touched the arc, right? I was talking about
wow.
that for a long time now, and it finally went down there to touch it. It's just been watching this just consolidate up here. I'm like, yeah, there probably could be a flush down here. So total finally did that. So everything kind of aligns with what you guys are saying, that yeah, this could be the last flush attempt before really things can go higher. Like when you look at total, you can even put on the other indicators of like the Ichimoku and stuff like that. And you know what? It's back testing the conversion line finally, and almost even the baseline down below. And this really means that there's no resistance above for the total crypto market cap. And this could be clear sailing to go maybe after this weekly candle close. And I know, Kat, you posted it on X that maybe Bitcoin could have a big move starting next week. And this actually could be the reason, right? Breakout, back test. I don't like the breakouts. I love the back test. And the last back test just wanted to go down to the 45-degree angle here. So that's what that did, right? Breakout back test on a higher time frame. And now we got a breakout back test of the arc. And this usually paves the way for something beautiful in the end. So I'm not too bearish here still. And I know a lot of people are posting on X like, oh, your support levels broke. But the support levels I was posting yesterday was more of a daily and 4-hour charts. So that's fine if those get broken. But the high time frame support zones for everything is still basically intact. And the bottom of that was basically the 3.02 trillion. And if you go back in time, what was the top of the 2021? It was 3.01 trillion. So guess what? That's also a breakout back test of the previous cycle top, So how is this bearish? I don't know, right? This is something that is reversing a previous massive resistance of the top, and now it's consolidating on top of it. And max fear is at this level right now. This really, really is bullish in my opinion.
I would like to add something there as well, because Cat made the
Yeah.
correlation with the 2021 fractal, and I completely agree that these two do not work. These two are simply the most different fractals out there. First of all, if we talk about the fundamental side of things, which is that back in 2021, we were transitioning into a quantitative tightening environment where the Fed would reduce the available liquidity in the financial system, which of course is bearish for the market. So the markets then start to price in this, and risk assets suffered the most. Now, on the other hand, we're transitioning into a quantitative easing environment where liquidity will be plenty in the markets and in the financial system. Second of all, what I would like to share here is the correlation with the Bitcoin dominance. Now, the Bitcoin dominance is basically when we have a durable drop, it signals a distribution phase. This is how we can use the Bitcoin dominance as a way to assess the broader market cycle. And I think that it's a very useful way through which we can do it. Basically, when the Bitcoin dominance was going down back in 2021, altcoins were massively outperforming. And this is also how I can use the performance of altcoins to assess the broader cycle. Right now, I think that there are a lot of people who are currently scared, and there are a lot of people who are currently anxious on, especially the rising geopolitical tensions over the last couple of days. And there is all of this short-term noise that has been piling in. I think that our main focus right now and our main question should be on whether Bitcoin has topped out for the cycle or not, right? Because certainly we could have a deeper pullback in the upcoming days. We could have a retest of some key support levels, which will go on in just a couple of minutes. But that's not where I think our main focus should be, because we make money on the long term by investing in this market. And if we want to make money on the long term, well, why focus on the short term noise? So I think that tracking the Bitcoin dominance right now is a very useful way through which we are seeing this broader cycle, basically. In 2021, when Bitcoin swept this high here, the Bitcoin dominance was already really low. So it was basically in this bottoming formation after the distribution phase already took place. Now it's forming new cycle highs. Yesterday it just formed a new cycle high here. So to correlate these two with each other is, in my opinion, uh, bad take, to say the least, because the Bitcoin dominance tells a very important story about scams. The Bitcoin dominance goes lower. That usually coincides with a distribution phase because it signals a rotation towards altcoins. And what does the rotation towards altcoins imply? Where does it come from? Well, it comes from a very high degree of risk appetite of investors. And this is the untold story that everyone overlooks, that Bitcoin dominance tells us, right? Basically, this is what it tells us. The risk appetite of investors. Whenever the Bitcoin dominance is going higher, it signals that there's a smaller risk appetite in the markets. And whenever the Bitcoin dominance is going lower, it signals that there's a higher risk appetite in the markets that usually market makers use in order to distribute. So these are my thoughts right now on Bitcoin and how we can use the Bitcoin dominance to assess the broader market cycle. And this is also where I think our main focus should be right now. So Kat, do you have any thoughts on the Bitcoin dominance?
I do. I think you guys talked about last time. Actually, I'm going to go ahead and go to the Bitcoin dominance chart here. You guys talked about last time how it is hitting a very, very strong resistance level. I should probably use regular, not log here. It is getting really close to 0.786 here that you guys are watching. Like just looking at the overall zooming out here, usually whenever you have a very, parabolic bull trend on something, and if it gets to a certain level, such as a 0.618 here, you see how it got rejected here very hard, had to come back and back test to 0.5 before it goes up, back test to 0.618 and go higher. Usually the biggest resistance of a cycle is at around 0.786, right? So it's going to be around 66.19%, somewhere around there. And we are basically approaching it. We're getting extremely close to it. When we were on the way there, it also looked like engulf all these 4 candles over here, and how you had to have 5 candles to, before you can actually break out to the upside here. And it's looking weaker and weaker. I think we're heading into a very, very strong resistance zone over here. So I think everything is kind of leading up to this. Looking at Matt's chart, listening to what you're seeing with on-chain, listening to what your thoughts are as well, Luca, I think there's just a lot of confluence to say that we are at max pain levels right now, or at least getting very, very close to it. So the way I see it, I think that Bitcoin dominance, and as much as everybody would like to see, now that everybody thinks it's going to go higher, we are getting into a very, very strong resistance zone here. It does make me think that, hey, maybe this is it. You can see how these FIB levels actually work out very well. 0.5, 0.382, 0.618. Now we're hitting 0.786. One level at a time. We'll see how it reacts there. But I think this is probably going to be most likely the final boss. We don't know for sure, but I think that we're hitting that level pretty soon. So, Matt, I know you were showing this the other day. Any other thoughts on this?
No, same situation. And I last time too, I showed the GAN between total 2 and the Bitcoin chart. So I can switch over just to show that. And it's still trending lower, right, as I anticipated as well. But is it really going to go back down and retest this zone? It doesn't necessarily mean that alts are going to just collapse. It could just mean maybe Bitcoin's going to rally harder first before the alts possibly. And so that could still lead the dominance down. But I think it might trend towards this angle at some point. Whether or not it touches the blue, that's still undecided. But it could just trend to this angle at some point before it really wants to go higher. But still, this is expected, right? The Bitcoin dominance has not reached the 786, and also the total 2 over Bitcoin is still trending a little bit lower. So we're not there yet, but almost, right? Almost there at that point. And I think once we get there, we'll have a nice reaction. But are we going to just keep drifting lower throughout the weekend and into the next week? That's still undecided for me. But like you just said, I think max pain is very, very near. And as long as you're not unleveraged, you're fine, right? Just accumulate. I mean, it's the best strategy for anybody to do, because trying to time the short-term moves and the like, especially on like the 1 hour or 4 hour chart, it's just really hard, right? It's really hard. And a lot of people get liquidated, and you're seeing that right now. Like Luca just mentioned in the very beginning, just many shorts are getting liquidated when they did that short little rally because they thought it was going to just tank. And then now the longs are getting liquidated. It's just max fuckery, as you say. Yeah.
What a wonderful word.
It is the best word to describe it. How else do you describe it, really? Yeah.
That is the most amusing and yet accurate thesis I have ever developed. Yeah. I would like to share something here on the chart, because I think there's a very interesting correlation we can make with what happened back in October of 2024. Now, I've made this correlation a couple of times in the past, because I think that we're gonna see a very similar emotional gap to the one we've seen back in October, right? Where basically what happened was a very rapid transition from a state of disbelief, where people didn't really think that this was the true reversal. Here, we had a very similar sentiment to the one we're seeing right now, of fear and anxiety. And as we were testing this high time frame resistance line, which we see here in the past has acted as a major reversal point. So each time basically it got tested, the price just rejected off of it. So for over 7 months, we did not have any single breakout above this line. So when we tested it back in October, a lot of people thought that it would lead simply to just another rejection and to a prolonged consolidation phase. Now, Remember this term, a prolonged consolidation phase, because I think it's one of the most important words right now that we're going to use in just a couple of minutes. As a lot of people seem to be thinking that we're going to see a prolonged consolidation phase, similar to how they thought here back in October, right? So then we had this short-term pullback. It even deviated below the bull market support band, which is currently something I'm tracking right now. I think that it's likely we're going to see a test of the bull market support band. And this is where my main focus is on right now, on whether this level holds and acts as the reversal point for the next move higher, or whether this level fails. If this level fails, and this I'm saying this because I'm seeing a lot of people being anxious or being uncertain on what's going to happen next, on whether we'll have World War III or rising geopolitical tensions, or whether we could have a prolonged consolidation phase. I think the answer is very simple to this. So I believe that as long as we keep holding key support levels, the most likely and reasonable outcome is for Bitcoin to continue high, to continue moving higher, and for this to be just a corrective move that eventually precedes the next move higher. Now, the thing is, and the thing I've noticed, a lot of people seem to flip flop with their bias, even though there isn't no there is no reason on why you would have that shift, right? There's not there isn't something that fundamentally changes in the markets right now, right? We are just seeing a lot of volatility, and that's pretty much it. So the way I'm seeing it, and I would love to hear your thoughts on this as well, the levels you're tracking. The way I see it is, if we test 95, $96,000 and then we bounce from that level, that is a very accurate and close correlation with what happened back in October of 2024, when we also had this test of the bull market support band. It even deviated below it and eventually preceded the next move higher. And the reason why I think the correlation with October of 2024 is so important is because it all comes down to basically liquidity, right? Not a lot of people seem to be thinking this way. I think that it all comes down to liquidity and market maker positioning. Basically, what we've seen is the same event and the same playbook once again, right now, to the one that happened back in 2024, which led to this major reversal. What happened was extreme fear building here at these levels, then the disbelief phase, with people thinking that we're going to see a longer consolidation phase. And then eventually the emotional gap came in, and this major spike in November, which led to, of course, a lot of FOMO in the markets. And so market makers accumulated here because everyone was anxious and scared that we could go lower. Then most sideliners didn't enter in this disbelief phase because they thought that we were going to see a deeper pullback. And then eventually they were left on the sidelines and they had to FOMO back in. And then market makers used those sideliners in order to distribute at the top. That's pretty much what I think will happen in the next couple of weeks as well. I believe that market makers have used retail as a counterparty over the last couple of months, especially throughout January and February and March and April. What happened was these liquidity traps on the low time frames, which played out over and over again. Basically, the series, which eventually were triggered by a tariff headline or a tariff announcement. And the reason why this has happened was that at these liquidity levels, there are a lot of long positions that are sitting. There are a lot of stop losses. And if you're a trader, if you want to take a long position here, you would set your stop loss right at the nearest low, which would be this one in this case. And so if there are a bunch of stop losses that are sitting at those levels, then you have, if you think about what a stop loss of a long position means, it is a forced sell order. So if they all get triggered at the same time, it leads to these liquidation cascades, which are basically a low liquidity move to the downside, right? And the reason why I'm saying low liquidity is you guys can see here what preceded each of these liquidation cascades was a period of consolidation, right? Because this reduces the liquidity, it reduces the volume that is being traded. Because in a very tight range, you don't really have a lot of volume that is being traded. So you have then some sort of narrative, something that leads to a breakup from that range or a breakdown. Oftentimes it is a breakdown and a negative announcement comes in and we have these liquidation cascades. And this has happened over and over again, all throughout early 2025. I think this is how market makers have managed to accumulate. And what we've seen back in early April when there was the extreme fear phase, that's where a lot of people have capitulated and increased their cash positions. And the reason why I'm making this correlation is that we're pretty much seeing the same disbelief phase to the one we've seen back in October, where a lot of people are panicking, a lot of people are buying into the narratives or focusing on the short-term noise. And I think that eventually that leads to a lot of people being sidelined on the long term, right? This is what I currently think. Because if we really think about what has happened over the last couple of days, is since we bottomed out in early April, a bunch of people were caught off guard by this reversal, right? They didn't really think that this was the true reversal, or because they sold here, then they want to get a better entry. So you look at the price going up. Let's say you're someone who has sold the bottom, and you look at the price going up. What's your first thought that comes in the mind when you reach this phase, right? You think to yourself, well, I'm not going to buy here because this looks like a local top to me. We could have some sort of pullback, so I'm going to wait for a better buying opportunity before we eventually reverse. That's how you think, right? And then the price goes higher. And then you think of it again, and you wait, and eventually what happens is you're pretty much sidelined at this point. Now the first substantial correction comes. The first substantial pullback in over 2 months comes. And you look at this, you say, oh, I'm not going to buy this because this is clearly a bull trap. And this is clearly a deviation, and all of these bearish narratives that have emerged over the last couple of days. Right? World War III, geopolitical tensions, tariff headlines, tariff uncertainties, FOMC, uncertainties with Fed's policies, rate cuts or no cuts, all these things which pile up on top of each other and lead to a broader environment of uncertainty and anxiety, basically. So even if you waited for this pullback, a lot of people who did are still not buying, because as the saying goes, everyone wants a pullback at the top, but they don't really buy when the market gives them a pullback. So yeah, this is my main thesis right now on the markets, and I think that eventually all of this leads to this emotional gap that will form. I believe this is the perfect environment of fear and anxiety that leads to this transition. So what do you guys think on this?
Matt, you want to take it away, or
Go ahead, Kev. I think
right. If you must, if you must, yeah. Want to flip it? Flip.
Flippity flip. Yeah.
Flip.
Flip it to you.
Yeah. No, I mean, I think the overall key thing is, I mean, it did finally break below 100,000K. Thank you, Luca, for bringing the market down. But no, I'm just kidding. But we did finally break below 100,000K. I think there were a lot of it's almost needed because it's also a psychological level. You almost need to go down and grab the liquidity down underneath of it. Just because a lot of people probably like put stop losses at like the exact 100K number. But regardless, I just want to agree with Luca on a lot of things too. Usually before a next move up in a very volatile way, you usually have a big giant flush that scare everybody away. And I'm sorry, I just rhymed. I didn't mean to. But basically, every single time when you have a big giant flush down, that usually is as long as it's a bull market forming higher highs and higher lows, Usually a big giant flush downwards is when the maximum opportunity is at, right? Before we make a move up here, we had a big giant flush down. Everybody thought it was going to go lower. Before we move up higher here, we had a big giant flush down all the way down to 49,000 before we were able to really repair the chart fairly quickly because we grabbed liquidity down there and we push higher. Before we make this big giant move down here, we had a liquidity grab down here around 38,000 before we push up higher, right? Same thing here. Before we push up higher, we have basically a double bottom formation here. Everybody was really scared around 28 $25,000, but it held support and just pushed up from here. And I definitely remember this thing right here as well, around 20,000, that big giant wick down here around March 2023. That was a perfect buying opportunity. And if you're also looking at the bull market support band at that time, it was a buying opportunity for sure, because you have the rising 21 EMA and rising 20 week SMA. And you're right, even if it breaks below on this particular bull market, even if it breaks below the bull support band, that was a buying opportunity, right? You already had a break in below over here. It pushed back up anyway and went up higher. Same thing over here. It's just been hugging bull support band and just went up higher. I have one theory that we may not have to touch the bull support band this time because we already did that. We already went underneath of it. We already backtest the bottom of it, and we tried to break above, and we broke above already. Could it backtest it to use that as solidify as a support? Sure. But whenever something like that had happened, the last couple of times, it did backtest over here slightly, and then it just kind of ran up from here. It teased maybe another backtest here. It didn't. Same thing here, right? It teased another backtest here, but it didn't, right? So I think that regardless of what we think might happen, we're just coming with a different scenario. It could backtest it, it may not. The entire thing is a range anyway. Even if you look at the daily chart here, you can see this is like an order block detector by Lux Algo, who uses different algorithms trying to pick up where the order blocks are for Bitcoin in this particular case. And this is over in Coinbase. You can see that market makers, they don't just have like one level, they have a range, right? This is the order block, and the order block is in the range. It's not just one level. And I think it's the same thing when everybody's looking at technical analysis. It's not just one point. If it breaks below, that's game over. It can always break down. It can always just be a range of level to pay attention to. So right now we look like we're just entering a block order here, and it's a range of block order. Can it go down further? Yes, it can, but it's a range that we're talking about. And I think actually the exact level doesn't really matter as much as the reaction when it gets to, the support range. And so far, I actually like the reaction so far. So we'll see. Another level to kind of pay attention to would be the Ichimoku cloud here on the weekly. You have basically a rising support level over here called the conversion line that could potentially serve as support, and right now, usually whenever it's rising, it serves as a better support than it is downward sloping. Downward sloping, it can be, resistance, but right now we got a little bit of support over here. And the current conversion line right now is, to be precise, is $98,567.99. And that could potentially get hit, today to close the week. Who knows? Maybe it doesn't. I think it's fine. If it does, I think the reaction would be there as well. Next week is going to rise. Next week is going to rise up to maybe around 102,000, somewhere around there. I wonder whether or not, because the technicals are actually improving underneath, that market makers just really want to back test and grab liquidity down below as much as they can before Bitcoin goes higher. I think that's a possibility. I cannot guarantee you that it's going to break down to the baseline down here, which is going to be around 93,000 or so. And that's also going to be confluent with whatever support band is right around, 94, 95,000, somewhere around there. I cannot guarantee you that it's not going to break down underneath of that and, grab liquidity down underneath there below too. I also cannot guarantee you that it's not going to touch the cloud over here around 89,000. I don't think anybody is really going to be able to guarantee you anything. But currently, we are still hitting a lot of support levels up here, right? When we're getting close to support, you're supposed to remain bullish, right? You see how confluence of support level with the bar support band, with a conversion line, with a baseline, together with the fact that it is already basically, where is it at? Let me get rid of that. It's already basically also testing this confluence zone of support over here with my angle with my arc, right? You see how this arc over here was pretty decent resistance, and now we're just basically back testing it 3 times now. like St. Peter, I think 3 times is good, but who knows? Maybe it breaks down, maybe it wicks down, maybe even breaks down and tests the bottom of the arc over here around 92, 93,000. The precise level to me doesn't matter because I'm not over leveraged. I'm in spot. Bitcoin's already a volatile asset. I don't really need to do like 50x leverage to make the gains that I want to make because I have patience, I have time. And right now, people who are impatient usually tend to get emotional and they are getting whipsaw right now and they're getting screwed right now. So, all right, I think I'm done talking for now, Matt. Go ahead, take it away, man.
No, I think you basically touched on everything. There's not really much to add here. I do have another confluence though with my total chart. On last time I just showed you the weekly chart, but I have like a daily chart. I just wanted to show just for a lower time frame right here, and it's also hitting a level 2, right? And you can see this 45 is very good. Like it was a previous resistance, support back in the past, right? All the way down. So this is a good level right here, right? Doesn't need to go lower. I mean, it could get some liquidity lower. There are some other levels here, but yeah, there's just so much confluence with Bitcoin, with basically Ethereum, with total, with everything. Even Ethereum, I can show this chart on my daily chart as well, right here, and it's wicking through some levels right here, right? So this is basically the blue level, 2200. That's also matches the 20-week moving average and the conversion line basically in that area. So I think, yeah, there's still some time for the daily candle close, for the weekly candle close. So I think it's just getting liquidity below before the weekly candle close. But perhaps maybe there's going to be some magical news event later. Oh, there's peace. And then everything just rallies towards the end of the day. You never know, right? But right now, I'm not seeing any really kind of damage. I think what we're seeing here is the potential to stabilize. But there could be a lot more pain before the gain because market makers have time before the weekly candle close. So that's my thoughts.
Yeah, it's very interesting because something I've been tracking over the last couple of days on ETH is the fact that we're currently seeing pretty much a breakdown from this bull market support band. So over the last couple of days, we've seen it acting as a strong support, and now it seems like it's breaking below it. But is this a true breakdown? Because this is something I've been thinking about. We've had a pretty substantial move to the upside since we bottomed out in early April. So this was a 2x move, basically. And now we're pretty much seeing a dip, and everyone is freaking out. But the way I see it from an Elliott wave standpoint, this looks to me like a very traditional, let's say, corrective wave 2, right? So we had the first impulsive wave. Now we're seeing the first corrective move. And eventually what that leads to is, in my opinion, an impulsive wave 3. And then later on, the rest of the impulsive wave. This is pretty much how market structures should look like. And the fact that a lot of people are currently freaking out that Ethereum is breaking down, even though it is still holding this major support level, right? It is currently testing this support range, which we see that in the past has acted as a major reversal point back in 2024, 2023. So this is a major reversal point, which we see also in February of 2025. It reclaimed it, right? Then it consolidated above it, and now it's retesting it. And a lot of people are freaking out because of this. Meanwhile, I think that from an Elliott wave standpoint, this is just a corrective wave 2. And the same thing can be said for Bitcoin as well. I think that we're currently overall in the crypto market, we have had this first and initial reversal of the lows here in early April. And now we're seeing this corrective wave 2. Now, the thing is with these corrections is that when we do have them, a lot of people are freaking out, of course, because that's how a correction should look like. Nobody should really buy into it because only a few of people buy when we reach the range lows, and eventually the markets go higher. If people would have been bullish here, that's a warning signal to me, because generally people get bullish after dips only in complacency phases. So after a period of euphoria and sustained move to the upside, then people sort of get euphoric. And when we have this first dump, this first correction, instead of now being fearful, they are euphoric once again, and they want to buy the dip. They want to position themselves for higher prices. That's pretty much how a complacency phase looks like. And I think that we haven't reached that point yet, because the risk appetite still is very low. And the risk appetite being so low, it has been translating into altcoins underperforming. And I think this is a pretty important topic that I would like to touch on today. Altcoins underperforming Bitcoin over the last couple of weeks. And now it seems like they're dumping, right? The Bitcoin dominance just formed a new cycle high. And a lot of people are wondering, well, when could this stop? What do you guys think on that? Kat, what do you think on altcoins, and when could they stop to bleed against the king?
Yeah, I can show some things here. I think in addition to the Bitcoin dominance that we were talking about earlier, I think it's hitting a very, very important foot level that's at the 0.786. That could be a resistance level that most people are not, getting ready for. The other thing too, if you're looking at the queen of crypto, which is Ethereum, I think a lot of the answers are just like you said, Lucas, at the Ethereum here. And you show a very important horizontal level. I also want to show you that, right now is basically challenging a very, very much of a crazy area right here with a lot of confluence. You mentioned the Boron support band, how it kind of broke down underneath of it. The week is still going on. It's in low liquidity condition. We're basically back testing a lot of this confluent support lines over here. I'll go through what each one of these are. But yeah, it looks like it's breaking down of it. But again, this could just be a wick, right? We haven't really had the week close yet. And we still have another, 10 hours, 11, 9, 10 hours before it close. We have the bottom of our support band here, which is the 20-week SMA, simple moving average. We have the blue line over here, which is the conversion line of the Ichimoku cloud on a weekly. And we also have this black line over here, which basically is the volume weighted average price from the cycle top. So that's actually where price is exactly at. And this is calculated from Coinbase. It's where price exactly is at right now. So we are at a very confluent zone of support, including the horizontal zone that we're looking at. A lot of things are pointing towards that this level should hold. And it may or may not, but it looks like it's the first time we're really challenging this confluent support zone over here for quite some time. So I'm looking forward to it, most likely holding by the end of the week, even as, Bitcoin is now even going down further. It looks like the zone over here is still relatively holding. So we'll see how it goes. But I think all eyes on Ethereum, to be honest with you. And I also think that even though altcoins has been underperforming, this is not like the situation where it was back in, I guess, back in like August of 2024. I don't know if a lot of people were in the market back then, but when you had that big giant wick down over there, altcoins were basically going down like 20, 30, 40% during this week. And we really haven't really had that. We've had like altcoins going down maybe like a few percent, maybe like 10% or something like that, getting everybody kind of really bearish and everybody just kind of, unhappy about it. And everybody's just being really, really complaining. Everybody's just capitulating through time at this time rather than through price. And I actually think that considering how altcoins generally are a very, very volatile asset, they're actually holding relatively well right now. If you're looking at the others chart here, this is basically the cryptocurrency market cap excluding the top 10 coins. It's just been holding a zone. It's not really been doing anything. It's been holding a horizontal zone over here very, very well. And so far, people are just basically capitulating through time, maybe a little bit for price, but I think it's mostly capitulating through time here. And their sentiment right now is, and you can read that on X too, like, altcoins. Why you even invest in altcoins? They do nothing for years. You could buy like Palantir or HIMS or whatever, so to me, I think that's another thing that is, puzzling in terms of it's just holding horizontal zone over here, but it's not really breaking down like what I'm used to when it comes to like an altcoin crash, right? One more thing I also wanted to point out is very, very interesting too, is Coinbase. Coinbase actually had a pretty decent breakout this week. I mean, granted, I think it's overextended. I think Coinbase is also hitting some pretty strong resistance zone over here. And if you're also looking at the Bollinger Band, it's also hitting the top of the Bollinger Band here as well, right? So on the daily here is way overextended. I think that some correction is warranted. But how can you be bearish on the overall cryptocurrency market cap if Coinbase is doing this well? Now, again, I'm not saying it's not hitting resistance, it's all hitting the monthly Bollinger Band top over here, right? But overall, it still looks like it's a breakout of the 0.786 over here. And it also looks like it is basically holding the conversion line over here from the Ichimoku cloud. It also looks like it's basically, maybe about to launch from there as well. So to me, I think that a lot of things that really make sense in terms of the narratives, in terms of, why some things are running before others. I think that it's either Coinbase had a false move and it's going to crash down from here if altcoin season is never to come, or that Coinbase might actually be leading what the cryptocurrency market cap is doing, right? If you're looking at the others chart and you're comparing to the Coinbase chart here, they look exactly identical, almost, with the exception of this month, right? And I guess last month as well, because you really had a pretty decent breakout of Coinbase, but you didn't really have that in others chart here. But before that, they basically look identical. So to me, I think that it's just maybe a matter of time before altcoins really start to kind of catch up and go higher. Probably follow Coinbase. That's my biggest guess. And then the other thing too, I think we also kind of talked a little bit about that yesterday with our brief live stream with Matt here, is that we're looking at MicroStrategy, which generally tracks Bitcoin very well. And MicroStrategy is also holding the conversion line here very well too.
Well, not next week.
We will see. It's probably going to end up breaking down a bit, but we'll see. But it's interesting, right? Doesn't mean that Bitcoin will have to touch his conversion line here. Doesn't mean that they both match. I wonder. That's interesting, right? But overall, I just don't really see MicroStrategy being a bearish chart either, because it's above the cloud, because you just had a bullish cross, because this looks like a cup and handle bullish continuation pattern. It looks pretty good. I think I've talked for a long time, Matt. You want to take over? I probably already talked about everything already, but go for it.
Yeah, I actually wanted to show some individual coins for altcoins, just so people can actually see what's going on here. And let me switch screens. So whenever I am concerned about stuff, I just go to the monthly chart, and the monthly chart tells a story. So here's Ethereum backtesting the bottom of the Ichimoku cloud, and just got rejected by the baseline and the conversion line and the arc up here. So what this move is actually expected. If you guys remember, a couple weeks ago, I did point this out, that the arc was resistance, and I put it on X and said, be cautious up there. And sure enough, that was the time to be cautious, not to celebrate, because it wasn't ready to break out. So we got the breakout, we got the back test in process, and there's still 8 days left in the month. So we can wick a little bit further if we wanted to. But this is a bullish formation, right? Not only do we have a Morningstar candle formation, but we got the breakout and a back test of the bottom of the Ichimoku cloud. That's good. Look at Doge. Doge also just went up to the bottom of the Ichimoku cloud, got rejected last month. And what is it doing now? Going back to the 50-month moving average as we speak. Basically, it's here, right? So we're building a base, breakout massively to the 786, rejection, backtest. This bodes well for the future. This does not scream panic. This is a very, very good development. We can even look at XRP. What do you know? It finally touched the conversion line on the monthly chart again. It just decided to take a long time. Didn't do it last month, but you know what? This month it decided to do it. The baseline's right below it, 189. And yeah, this is going to start rising pretty soon too, right? This long candle is actually going to start to disappear. Not next month, but I think the month after. But this is basically set up to continuous journey higher. And the angle is getting pretty close too for everything to be, the stage is set for the right direction. We can look at Link here, monthly chart. Yeah, it just got rejected by the 50-month moving average month after month after month after month after month after a breakout back test. But it's holding the 45-degree angle. It's actually holding a very important zone here. If you just draw a line, it's a big support zone, right? a big breakout zone. It actually was a breakdown zone for a while, but this breakout back test, and it's been holding that zone for a while. So these 1120s, 1130s look pretty juicy if you ask me. We can even look at Fetch. What is Fetch doing? Oh, it's back testing the bottom of the Ichimoku cloud and the 236. Is this bearish? Not at all, right? It's a very bullish development. We can look at H-bar. What is doing? Oh, 50-month moving average, just like Doge. These charts, Doge and H-bar, look very, very similar in my opinion. And it's just a big breakout to the 786, exactly like Dogecoin. Backtest of the 50-month moving average, exactly like Dogecoin. So if Dogecoin is going to do well, H-bar looks like it's right in the same position. So this is not a concern for me. We can look at AVAX. AVAX is going back to my blue level, my blue again level, and also the 236, 1682. We'll see how it closes the week and the month. But these levels are kind of proof to me that I want to be buying and I do not want to be selling, because why would I want to sell monthly support? I would never want to sell monthly support. This is a bull trend. It's higher highs, higher lows, except for since the top, it's been trending lower. But the grand scheme of things from the 2023, it's still higher lows, right? It's still higher lows. And so this is something that I cannot be bearish on. I'm actually very excited about these levels. I just did a little bit more buying during the live stream here, just because it's too attractive, right? It's too attractive. So with that, Luca.
Yeah, so chart I've been tracking is the Total 3 and Bitcoin pair. So basically what this chart shows us is how altcoins are performing against Bitcoin. And I think that, as I said earlier, when I was talking about the Bitcoin dominance, it tells a very important story about the risk appetite. This is pretty much how the risk appetite has developed over the past few years. It just went lower and lower and lower. Risk assets kept underperforming against the traditional safer asset, which is Bitcoin in this case. And basically, what we're seeing right now, and I think this is a positive indication for the broader market, even though altcoins are underperforming and bleeding against Bitcoin right now, I think the fact that they are is a positive sign for the overall market cycle, right? Basically, what we see here, each time altcoins start to outperform, here we have in the black, we have the total free and Bitcoin pair, and we also have the correlation with Bitcoin's price action as well. Basically, what we see here, each time altcoins start to outperform, we see here back in 2017, altcoins start to outperform, Bitcoin topped out for the cycle. Back in 2021, we reached this phase, altcoins start to massively outperform Bitcoin. And right now, altcoins are underperforming, which is why I don't think that we're in a top formation, right? Similar to the ones we've been back in 2017 or back in 2021. The fact that we're seeing altcoins underperforming is a positive indication for the broader market. So even though altcoins are, bleeding and it might be painful to the holders, I think it's a good indication, and I think it's an indication that we're headed higher in the coming months, because once again, when altcoins start to outperform, it signals that there's a very high risk appetite in the markets. And whenever there is a very high risk appetite in the markets, we have a distribution phase, and market makers use the very high risk appetite to distribute. This is basically how it all goes. And I think that the fact that we're seeing right now the sentiment being in absolute fear territories, everyone thinking that we're going to have a deeper pullback, and everyone focusing on the narratives right now rather than the objective data, which is currently showing us that we're going to have the funding rates, right? Let me show this chart here. So funding rates have actually flipped in negative territories, right, on most exchanges. So you have this chart, which is basically in deep green territories. Now, funding rates show us the ratio between longs and short positions. Whenever we have funding rates nearing negative territories, it signals that there are more shorts that are piling in than longs. Oftentimes, what this leads to is bottoming formation, because every time shorts pile in right at the bottom, right? And seeing funding rates in negative territories in a bull market, and especially seeing funding rates being in negative territories while Bitcoin is still nearing around $100,000, is an indication of how much we have really evolved throughout this bull market. If you would have, you know, if you would have told me that people would be fearful when Bitcoin is at $100,000, I wouldn't have believed you a couple of months ago, right? I thought back in September that we were going to see a move to $100,000, and that would have been it. That would have been the cycle top. And now people are fearful at $100,000+, which is absolutely insane to me. Seeing funding rates being so low, seeing funding rates nearing negative levels on most exchanges, on most tokens, not just Bitcoin, is an indication that the most likely and reasonable outcome right now, even though it may seem counterintuitive with the current rising geopolitical tensions and all the bearish narratives that have been emerging over the last couple of days, is that we're going to go higher, right? And I think that this is exactly what we need to see before we have that transition into a risk on period. So yeah, this is pretty much my standpoint right now. Kat, what do you think on funding rates? Do you have any thoughts on how investors are positioning themselves right now?
Yeah, no, thank you for sharing all these very valuable information. I think we actually would always like Confluence. We look at sentiment, we look at what traders are doing, and then we also look at the technicals, and we also examine the fundamentals to see whether or not things make sense or not, right? So I think it's very, very important to look into that. I actually have something kind of related to that, and this is on a very much of a lower time frame. And I know it sounds ridiculous, but I'm just trying to illustrate to you all like how ridiculous this whole crash has been. In addition to looking at funding rates, in addition to looking at what like traders are actually doing, you can also see what the big money is doing, what the price action is actually telling you. The top right here is Fartcoin, right? Ridiculous. Who cares about Fartcoin? Nobody, right? Like there's not even any fundamental really that ties to it besides the fact that this is a phenomenon, is a cultural phenomenon that's basically tied to increased liquidity, having overflow, having excess. That's when meme coins like Fartcoin would pump, right? So the top here is Fartcoin, the bottom here is Bitcoin. And you can actually see, like I was noticing something very interesting yesterday too, was when Fartcoin was dumping, it was dropping like 8 or 10%, and Bitcoin was holding relatively well. And then as soon as Fartcoin starts pumping back up again and have its recovery, that's when Bitcoin dropped, right? The same thing just happened just now, today. You saw Fartcoin just dropping another 8 to 10%. And you just had a bullish engulfing candle right here. The trees are bottom over here. Guess what Bitcoin is doing? It's dropping down. Like, this is telling me that I think if you're asking me in terms of what the risk appetite is from the retail investors, extremely poor right now. But if you're looking at what is actually being bought behind the scene, Fartcoin is being bought behind the scene compared to what Bitcoin is doing, is actually a step ahead, right? That tells me something. And also, and the reason that I think it's funny to talk about it, but I actually think it illustrates a point, right? Fartcoin, bull market support band. It doesn't have that much history here, but it's been around long enough that it has a bull market support band that's being shown here. It just flipped it from resistance here into support, right? You're talking about something as ridiculous as Fartcoin that is front running Bitcoin on its recovery, and also technically it's already back tested the support level that Bitcoin hasn't even really back tested. To me, I think it illustrates the point that maybe it's just the matter of time before things reverse. So I actually very much appreciate your Confluence point. Look at the funding rates and things like that, because I know that there are a few technical folks out there that also look at those kinds of things, but they haven't really been that consistent in showing the kind of things that you're showing. I think you're probably one of the only ones that actually are consistent with your bullish thesis and not just getting and looking at the objective data and not getting thrown away by all these other narratives and fears that are out there. So I appreciate you showing us that.
Yeah, man.
Matt Spee, anything
No,
to
yeah,
add?
like
or-
those funding rates, like nobody looks at that stuff. And actually, I never even looked at it until you really started talking about it, Lucas. So that's really good, and it just shows a story that things are super. They look very bottomy. They look very bottomy. I mean, I don't really have much else to add. Luca?
Yeah, I think that funding rates tell a very important story, right? And first of all, before we talk about, you know, I would like to show a chart here, which I think is very interesting, right? I showed it in the beginning of this conference, and it's very interesting how it has developed over the past hour since we've been talking. We were around these levels a couple of minutes ago, and now the open interest has been absolutely spiking up while the price has been going down. This is very interesting to me, right? We see here the initial dump, the initial pump in the open interest. Then we had sort of this bounce, and the open interest dropped because shorts got squeezed, and now they're piling in once again, and they're absolutely, revenge trading this bounce here. This is very interesting to me because it shows how psychology works, and if we also correlate this with funding rates, right? We see here funding rates dropping over the last couple of minutes, over the past hour. And this is very interesting to me. By using this correlation, we can really understand what's happening behind the scenes. And now, of course, the price is once again reversing. The open interest is starting to drop because shorts are getting squeezed. This is why I always emphasize the importance of having an objective analysis and a long-term strategy that we stick to, because else we risk just being, counterparty and liquidity for market makers who just flush these leveraged investors, right? This is what they do. They do not care whether you're a bull or whether you're a bear. They just want to get your liquidity. So this is pretty much how I'm using the funding rates, both on a high time frame basis, as I showed you earlier. Most funding rates have flipped into negative territories, and historically, each time that happens in a bull market, that either coincides with a local bottom or a macro bottom. And second of all, we can also use this correlation between the price action, open interest, and funding rates on the low time frames in order to gain a deeper understanding on what really happens behind the price action and behind the screens and charts. So this is very interesting to me, and I think we can also go even deeper into this and think about the psychology part and how psychology plays a major role in shaping the markets, right? This is such an overlooked topic that I always try to think about because the psychology has always been a major role in has always played a major part in shaping the markets, right? And especially the liquidity rotations, the cycles, the economic cycles, even, right? Because we have investor psychology, we have consumer psychology, but it all comes down to human psychology. And something that we must think about is also the narratives that emerge off of this. Right now, we're seeing the prices going down, but before we had the prices going down, the narratives were positive, were bullish. Now we're seeing the prices going down, and of course, we have bearish narratives. And I think that this is a very important topic I would like to cover, which is the mainstream media, right? And the role of mainstream media. Is the role of mainstream media to highlight objective and factual data, or is the role of mainstream media? Because let's not go into the all the conspiracy theories here. Let's speak objective facts. What's the role of mainstream media? How do they make money? Through ads, through clicks, right? They want the most clicks. How can they get the most clicks? From farming, engagement. How do they do it? They have to appeal to the basic primal emotions of humans. And that is either greed or fear, right? So each time the prices go up, we have a bunch of positive narratives. And let me give you an example how the mainstream media can frame an objective information into two very different ways. Basically, what I think will happen in the next couple of weeks and months is the Fed transitioning away from their quantitative tightening policies and, you know, reducing rates and so forth, right? Basically stimulating the economy. Now, there are two completely different ways you can present that objective information. Let's say the prices are going down, okay, and we have a prolonged consolidation phase. The mainstream media will present that information in the way that rate cuts mean that the current path the economy is on right now isn't sustainable anymore, and that's why the Fed needs to intervene, because we have some sort of weak labor market or weak consumption rates, and that's why the Fed needs to intervene. Now, let's say the prices are going up. The Fed can say that rate cuts are bullish for the markets because it signals that new liquidity will enter the markets. It signals that we're transitioning into an environment where capital is more accessible, and that, of course, is a positive indication, especially for risk assets and small caps, which always need access to cheap financing and liquidity, right? And that justifies the rally, basically. So these are two completely different ways through which you can present the same information two two different ways, right? And that is very interesting to me, how mainstream media plays a role into all of this. This is why I don't think that narratives are so important to track. And this is also why I focus so much on the objective data we have on the on chain metrics and charts, because I'm a big believer in the efficient market hypothesis, which tells us that information gets included in the price. And that basically, is highlights something huge which a lot of people seem to overlook. This is also why I've been tracking the oil's price over the last couple of days to track the geopolitical tensions, right? So let me move on to the oil chart a bit here, and let me show you what I'm currently tracking. So basically, what we have here, the market hasn't opened yet. So oil's price is currently above this level. It's about 77 or 78, I think. But nonetheless, oil's price testing this high time frame resistance range is, in my opinion, telling an important story of how these geopolitical tensions will move on from here. Basically, we've had oil's price going up, and I think that the markets always price in the information before it comes out. So we have a lot of expectations on what could happen. We have market makers who always know something before us. So the markets always make the first move before the narratives and the headlines come out. And I think that always price testing this major resistance range, right? We have three major resistances. We have this resistance line, which we see here in the past has acted as a major reversal point. We also have this resistance range, which we see has also acted as a reversal point in the past. And we also have this golden pocket between the zero point 0.5 and 0.618 resistance levels on the Fibonacci retracement. And all of this is basically showing us that it's likely oil will have a pullback, right? Let's think about the objective reality of things. When we're testing such a major resistance range, it's likely you're going to see a pullback if you're referring only to a technical, if you only have a technical stance, right? So that would mean that the geopolitical tensions are likely to cool off in the next couple of days. And the Israeli and Iranian stock markets are currently sitting near all-time highs. So what is this telling us? When two countries fight against each other and they both have their stock markets at all-time highs, generally what you would see is a bunch of institutional investors, a bunch of whales exiting the markets. That will lead to a crash if things were really heating up and serious. But the fact that we're seeing both stock markets currently sitting at all-time highs, the Israeli stock market just formed a new one today, right? That is telling me that geopolitical tensions are likely to cool off in the next couple of days. And I think that by tracking funding rates flipping in negative territories, late shorts piling in, uh, us testing a bunch of support levels currently, and the market structure is still looking great. Right? I think that the charts are currently telling us that we're going to see a bounce in Bitcoin's price and equity markets, and that geopolitical tensions are likely to cool off, right? So this is why I'm such a big believer in the efficient market hypothesis, and this is also why I use charts and objective data in order to avoid falling into the trap of, you know, tracking short-term noise, because short-term noise and narratives and headlines always change, but the objective data will always remain objective. And I think that it is our role to interpret objective data the way it is and not fall victims of the short term noise and to the mainstream media who is just trying to farm engagement off of us, because that's what's really happening. That's what they do. That's what they try to do, is farm engagement from us by appealing to our emotions. So of course they're going to have the most ridiculous headlines. I've seen a bunch of headlines, you know, USA enters war with Iran, let's say. That's the headline I've seen from three main channels, from New York Times, from I think BBC, and someone else. Right? That's the headline, and it is factually not true. So that's why I think that tracking the charts is far more valuable than the narratives and the headlines. What do you guys think on this?
Yeah, I think
Oh
that
man,
nailed it.
Matt, go for it. Go for it, Matt. I have a whole spiel here prepared, but please
No,
go
I
for it.
just wanted to say, like, yeah, Kat and I were actually talking about that, like, how that news came out exactly about Iran right when the daily candle closed for crypto, like, or like right before, like a few minutes before, so they could close the daily candles above like certain levels or something. Like maybe that's more of a conspiracy theory than anything, but I don't know. Like it's just you get so many just crazy news narratives thrown into your face here, and we got another one just right now, and I wanted to just show this one right here. Look at that. USDT just minted $1 billion, right? So what are they going to be doing? Are they going to be buying this dip? I mean, that's kind of seems like it, really.
I'm not
Oh, you're
seeing
not
that.
seeing that? Okay, let me.
Yeah, I'm not seeing that. Getting rusty with your
There it
speech.
is.
Yeah, there
Yeah.
you go.
Yeah, there it is.
There you go. Well alert.
Billion USDT. So I mean, here's a news narrative for you right there, right? Oh, what are they doing exactly at a high time frame support zone? Maybe that's more of a conspiracy theory. I don't know, but usually when you see that, that's more liquidity coming into the market. So go ahead, Kat.
Yeah, I think it's important to see what they're actually doing behind the scene rather than I'm just showing the Bitcoin chart here. I'm not showing anything in particular, but I do want to spend a few minutes kind of talking about what Luca was talking about as well. I was seeing posts on X where they're basically saying, well, we've never lived live that the way it is right now is so complicated. And I'm just looking at it like thinking to myself, I was like, what are you talking about? We've always like life is always complicated. The world's always complicated. This is not anything new. We just had the highest inflation rate over the last 50 years. We just had the quickest rate hike, like arguably ever. We just had the Russian Ukraine situation where everything was just kind of blown out of proportion in terms of how it would affect the world, right? A lot of speculation happened there. None of that really came true. I think that people actually didn't end up starving because they don't have wheat, or oil actually just kept dropping down afterwards. So a lot of things just didn't really become true. Multiple Middle East conflicts that happened over the last few decades, especially over the last couple of years, over and over and over again, the innocents are getting sacrificed through these different conflicts over and over and over again, and it just doesn't end, right? COVID, we had an economy, the entire economy just completely shut down for a few weeks, right? Lots of uncertainty there. The economy completely shut down. That's never happened before. Tariffs, have we gone through that before? Yes, we have, right? I mean, it's the same president that last time basically did the same thing, and and a lot of people are based on their fundamental narratives based on what one guy says without looking back at what happened last time either, right? And then on top of that, we've had tariffs going. We've had tariffs from the Trump administration that got carried on to the Biden administration. They didn't take anything off, right? There's basically nothing changes, with the exception that the narrative keeps shifting from one sensationalism to another, right? Whenever things get really bullish, CNBC brings on these really bullish talking heads like Tom Lee. Like Tom Lee gets really popular whenever there's a bull market. And whenever it's bearish, they bring Jamie Dimon here talking about economic hurricane, when is exactly the area of time where you're supposed to have the maximum opportunity to buy before the next run up, right? Why is that? The other thing too is, yes, we are currently experiencing a world conflict. There is war going on, but it's also very, very different in terms of how it is now scaled towards how it was before. And I think the biggest thing is because really, I mean, it's extremely controversial, but really ever since World War II, I don't think anybody really wants to go through such, atrocity ever again. And we have policies that are being made to mitigate that. Right now, war is not the same way that it was before. It, for the better or worse, it's becoming a lot more efficient. It's becoming a lot more targeted, and it's a lot faster. Whoever has the best AI and best technology, and we're lights out compared to where we were before, just 20, 30 years ago, right? We're talking about, this is a very, very different ball game here, and things can be over a lot quicker than it was before. Last thing too, I want to say is there's only one constant thing, or two constant things that are constant in life, and I'm not talking about like change is constant. Of course, change is constant, but there are two things that are going to be unchanged until the United States collapse. One thing is liquidity is going to go up over time. That means that the market is going to go up over time. The second thing is that innovation is gone up over time, and life is always better compared to how it was a few decades ago. It doesn't matter if you're a queen or a king from 200 years ago, 300 years ago. Life is better now compared to where it was before. You ever gone to like Versailles and look at like the glass room or whatever? And you're like, oh yeah, we can probably reproduce it in a week now. Like it's not, it's just life is always better now compared to it was before. So that is something that maybe I'm a little bit of like an optimist. Maybe I'm a little bit of, but I just don't really like, I turn off my feed. I don't watch the news. I don't care. That's my stance.
Yeah, and also I just want to add the new narrative coming out is like oil prices, like you were saying, Luke, are going to start skyrocketing. They're not going to do rate cuts. They're not going to do this. So we're just going to go start a new bear market. So I mean, I'm seeing that on X already from a few people. So it's like, man, these narratives, these bearish narratives, and a high time frame support. Especially in an uptrend, we still are in an uptrend, guys. Bitcoin still is around 100,000. This is not anything to fear, in my opinion. So that's why I always tell people, ignore the news, right? And I think that's one thing we all agree on. Just pay attention to the technicals, because they really are telling a better story than the narratives out there.
You can chart rates. These are, you can chart yields based on real market conditions. Right now, it's just look distributive here for the 10-year. Based on the monthly chart here with the Bollinger Band, the 20-month moving average is curling down, right? And then the other thing too is the 2 years are already looking extremely weak. It's just been riding along the lower Bollinger Band. It looks like it wants to form more low highs and low lows moving forward. So I don't know. Like it's kind of crazy whenever somebody talks about, Jerome Powell. They actually start to they actually start to lower rates. When was the first time they cut rate? I think it was like September 2024. Right. But yields has been dropping for 5 months straight before he does that. As soon as he cuts rates, it bump up. So the real market conditions are already priced in terms of what the liquidity condition is supposed to be, based on what the real world is doing. I think the Fed, for the most part, they look at these things and they try to do the appropriate messaging, not for the market, but they mostly just follow real market conditions, which is what Jerome Powell says. Like he's basically like data dependent. That's what he says. He's not telling you anything that you shouldn't be aware of. But next thing you know, everybody like listens to Meet Kevin, who gives a delayed narrative on a delayed narrative. So I don't know what else to say. Luke, are you still there? I'm sorry about the rant. I keep on. I'm not. I promise I didn't say anything conspiracy theory. But those are my honest thoughts.
Yeah, so. Man. Are conspiracy theories conspiracy theories, or because now it seems like conspiracy theories are basically being ahead of curve, right? And
Right.
I've had this conspiracy theory, let's say, a couple of months ago when let me actually show the post I shared here. So
Flip it, Maspy. Flip it. There you go.
Well, he's still working
yeah,
on it too.
yeah.
Just want to get on my screen.
So basically, we
But
had
yeah, I
this
mean,
this thing with market makers back in March, and I shared it here. I shared it here in this
oh, there you
conference.
go. Yeah.
But this is pretty much the same thing I talked about. It was a conspiracy theory at that point, right? Not a lot of people really believed that that was truly what was happening, and it happened over and over again. So we had this happening back in February. I made a post on it. We had it happening in early March, once again, and it happened over and over again. And there's a whole conspiracy theory. Well, how could Trump be connected to all of this? How could narratives be connected to all of this? How could the market structure be connected to all of this? Right at that point, it was a conspiracy, but I ended up being just ahead of the curve, because then I used this argument to say that, you know, we will have a short-term pain for long-term gain scenario, where that was the short pain you're seeing here. This was the short term of a long-term gain, where this is exactly what I said here. It's all part of the same short-term pain for long-term gain setup. And I use this argument, this conspiracy theory at the time, to justify why I was bullish. And I think that this is exactly what's currently happening right now. Right now, it seems like saying that, market makers are intentionally inducing fear in the markets right now, with all of the uncertainties around war and all the uncertainties around oil and inflation making a comeback, no rate cuts coming, no liquidity coming, us entering a recession and the bear market, are just the same thing that has happened then, where a lot of people call it a conspiracy theory, but you end up just being ahead of the curve. So what do you guys think on that?
Well, I mean, I think not all conspiracy theorists are ahead of curve. I think there are actually real conspiracy theorists out there. But I think when it comes to the market and when you see objective data to support your thesis and when nobody else tend to agree with you, then I think you're definitely ahead of the curve rather than being a conspiracy theorist. So based on what we're all kind of seeing together, I mean, granted, it can keep going down a little bit more before it goes up, but like overall, it just seems like it's getting set up here to screw retail over and over again, as it always has been, as it always will be. So.
As an end note, where do you guys think the biggest opportunity lies next?
You mean for like Bitcoin or in general?
In general, I mean, where do you guys think the biggest focus should be right now, or the biggest opportunity lies next?
I mean, your family, your children, your parents, your friends. I'm just kidding. I think currently we're entering a support zone. You know, really anywhere like around 90K is, to me, is a pretty strong support zone for Bitcoin. How far it goes, I don't know. I feel that this could be it. I really feel that this could be the maximal pain this weekend, based on what I'm kind of seeing here, based on technical, and also now that looking at the funding, rate, that it just seems like it's pointing to, right, that we're very very close. So I don't really have any exact level. I don't think anybody should really give like an exact level because the market doesn't work that way. The market maker is always going to try to see how far they can flush things down and how how scared people can get before they reverse. And they're always going to do that. But ultimately, when liquidity comes in, and I think it's been coming in, it doesn't matter. I think it's a range. I think the range has been started for a while now, over the last couple of days. So how low ultimately it gets, like, it doesn't really matter to me. I don't know if that's a cop out answer or not, but
For me,
100%. Definitely agree with that.
for me, the opportunities I see still with altcoins, like I showed earlier, they're almost all at their monthly support levels or wicking through them with a whole week left until the monthly candle closes. So very, very nice, right? I think that's the opportunity. I know I see a comment of that somebody posted about Coinbase is not an altcoin play, it's a stablecoin play. I mean, if stablecoins boom, then there's going to be a lot of liquidity for altcoins as well. So this is very synonymous in my opinion.
yeah, most of the altcoins, sorry, most of the stable coins are minted with Ethereum. So I don't,
Yeah.
like Coinbase does not come up with like by themselves just come up with stablecoin. Like that's not how it works. Yeah, I don't understand.
Yeah, that is. Those are definitely some great perspectives there. And I think this was amazing market talk. I think we covered a lot of topics. Altcoins, Ethereum, Bitcoin, the broader cycle, the Bitcoin dominance, mainstream media and narratives, and everything in between. So I would like to thank you all for joining today. I think that us three is better, and I really think it was a very good market talk.
Yeah, me too.
So for everyone in the audience,
Yeah.
for everyone who's watching, please make sure to follow these guys because they bring out daily value to their content, and they are absolutely amazing.
Thank you.
Yeah, thank you, Luca, for organizing these things always. I think you're definitely a much needed voice on X and on YouTube. So thank you so much for doing what
Yeah,
you do.
thank you, Luca.
Yeah, I think we should make this a regular thing. What do you guys think?
I think we can if Cat is free. Yeah.
I think that maybe like maybe like once a month or twice a month or something like that. I think it'd be great. Yeah.
Yeah.
Maybe more regular. Who
Alright.
And
knows?
especially when there's
Depends on how things
volatility,
go.
I'm happy to do that too.
Yeah. Yeah, I think
Yeah.
like this weekend is actually perfect timing because I think it's important to be here to reassess your thesis, especially when during times like these. Like this is the time to talk about the market. So yeah, looking forward to the next one.
Yep.
All right.
All right,
See you
guys.
guys. Good
Take
night.
care. Have a good
All right. See
weekend.
you guys.
Awesome
Yep.
market talk.
Yep.
Have a
Bye.
nice weekend.
All right.
Yeah.
Bye, guys.
Bye.